the principle in trading, the principle in trading is that you're winning trades to cover up for your losing trades. Therefore, it is imperative that you do not miss an opportunity when it comes about. It's imperative that you are mentally strong to take that trade, and in order to become mentally strong to be able to take the trade, you have to accept the fact that you are not wrong when you have a losing trade. A losing trade, it is part of the business, and therefore you need to be alert, always be alert for the opportunity when it comes. And when the opportunity comes, you must take it. And I'm going to keep on repeating this like a broken record, because that's the only way any of us can succeed in trading. And if you expect to last in this business for a very long time, you need not to be affected by the losing trade. You cannot take the losing trade personally. Okay? You can have 6 or 7 losing trades, and then one trade is going to make up for those 6 and give you some more. Right, so right now this is the move we have, and we have this weakness, not weakness, again, this close over here at, this is an inside day. Again, it is also a very narrow range day. The high is 142, the low is 141.30, and it closed pretty much at the low of the day. So what we are going to do, it's going to give us a very easy trade. We're going to buy it above the 142 when it takes out this high, and I'm going to sell it below this low when it takes out this low. This is a no range, it's a narrow range day that followed a big range day. So I have a big range day that followed by a very narrow range day, which is an inside day. Therefore, it is a neutral zone. I'm not going to waste my time with it. If it gets above the high, which is the 142, I'm going to be buy it and take it to the long side. I'm not going to care about anything else. If it breaks below the low, which is the 142, the 141.29, I am going to, for 141.30, now I'm going to sell it, and that's the end of that. Okay, so we're going to, let's make sure we have this thing confirms on the intraday, and let's see the low here is the 141.30. Let's see where it fits. And you can see right there, look at this, there is your 141.30 right there. And therefore that break, that low of the day is when you, this is when you gain confidence in your work, because the low of the day is actually the structured point or the structured turning point on the intraday chart. So that is, now you have the bigger time frame is confirmed by the smaller time frame, or the smaller time frame confirming the bigger time frame. Now you have the extra confidence in the trade. So for the euro dollar, we're going to sell it below 141.32, and we're going to buy it above 142 even, which is the high, right? And my structural short on the downside is the 139.68, which is again right here, 139. Now that is going to be my structural short, 139.81. And if I sell it at 141.32, I'm going to place my stop above the market side, which is the 140.16, and if I'm going to buy it above 142, I'm going to use still the same market side. So the stop is going to be the one and the same for both, because we don't have any technical place to place it. So we're going to use the average, and my structural long point, I have to get it from the daily chart. This is really my next structural long point to the upside, which is the 142.81. So that is my structural long point. So my structural long point is the 142.816. Okay, so that is the euro dollar. We're going to buy the euro above the 142, and if we do, our structure long is about 80 pips away, so we should have a really nice move to the upside if it does that. And our stop is going to be the 141.60, so I'm risking 40 pips on that trade. On the short side, I'm going short below 141.32, and my structural short is the 139.68. and if I go short at 141.30, I'm also using the 141.60 as my stop. Okay, that is the euro dollar. Let me save it, and if anybody has any